Welcome, everybody, to this week's Middle Class Investor. This is Seth Martin. It is July 24th, and we've got a chart of the S&P 500 up. This is the chart we like to look at to get a broad view of the market. And as you can see, we had another up week, a really strong up week. We continue to have these strong up weeks, and you can see I got this channel. It's a pretty narrow channel, but it's even holding this very narrow channel. You know, it's just now in resistance. Last week it was just touching it. Now it's in it. So we might expect to maybe see something like a doji next week, something that's a little bit more shows a little bit more indecision in the market. That could maybe look like, just as an example, something with a little small box and a tail that goes up this way, and a tail, maybe another tail that goes down this way, something like that, where maybe the box is even smaller, from open to close. But we would expect that the market would do some sort of pullback here before resuming higher, if it's going to resume higher. I'm not sure what's driving the market higher. Nobody really ever knows, for that matter. But there's been, what's really unusual about this move up is that there's been big hedge fund managers that have come out and said there's something wrong with the market. It shouldn't be going higher here because people have been pulling money out of mutual funds monthly. I think last month was $80 billion were taken out of the market through mutual fund redemptions. So you got some strange stuff going on here. Who knows? Maybe the central bank is buying stock. My understanding is they're not supposed to be able to do that, but who knows what they're doing. So bottom line is the market's going up. You get paid on price, and so that's that. Now, if we go down to a daily, I just want to go down to a daily chart for just a second. I want to show you that we do have a signal on the RSI, and these are usually pretty good. So let me go down. I was going to try to get both the chart and the indicator online here, but I can't. So you can see here this red arrow. If I can try that again, let's see here. Let me come over here. So we've got this red arrow right here, and that's showing that the RSI has rolled over and come back through the 75% line. Now, a market that's overbought can stay overbought. There's no hard and fast rule that says it has to go down. But you can see here, and this is a great example right here. If you look at this arrow right here, and then you look at what happened to the market here, it pulled back one day and then continued going higher. But then this arrow here, you can see it rolled over and pulled back, quite a bit. What is that? That's about 100 points on the S&P 500. So I don't know which one it's going to be. It could be just this short little pullback here and then up, or it could be this longer pullback and up. My feeling is, and this has nothing to do with anything, but my feeling is that it should have some sort of deeper pullback, because we have almost no pullback here. We might even get a pullback back to this line again. So, but there's just no pullback at all here. So I'm expecting some sort of pullback here. All right, let's go back to a weekly chart and look at some of our other charts here. Let's look at the VIX. There it is right here. I always have trouble seeing the VIX for some reason. The VIX is, as low as it's been in the last 2 years, really. And this is very unusual actually for the VIX to be this low for so long. I mean, we've had this, we had a kind of a 1, 2, 3 week spike where this spike was really just down. So really, we had a 2 week, kind of a 2 week up and then right back down. This is highly unusual, and I've used this saying before on here, but I'll use it again. When the VIX is low, it's time to go. So, some of you out there with 401ks, I mean, you might be asking yourself, I don't know, is the reward for going much higher here worth the risk? So, um, especially if there's a lot of funny money and phony money kind of supporting it. A lot of times that phony money and funny money can go away really quick, and you can have almost a crash, something that you can't really respond to very quickly. Let's look at Treasury yields. Treasury yields, the theme is here. I mean, we did make a lower low. This low here was lower than this one that was 2 years old, which means yields were not pulling back. This wasn't corrective. This was a continuation of the downtrend. The question is are they done going down? I don't know. What we need to see, let's talk about what we need to see happen. If I were going to invest in bonds, what would I wait for to see happen? I would wait to see some sort of break of this trend line. So let's just draw it. Some sort of break of this trend line like so. And then and then some sort of pullback back to or near the trend line, and then a turn up. And if it starts to turn up, that's where I would say, okay, I can take some risk on bonds. And the risk you'd be taking is from here, from this area right here, where that turns back up down to something below this low. And that's just arbitrary. But the reward could be quite high. So that's what I see on bonds. I don't want to spend too much more time on there except to say that interest rates are at 40-year lows, 45-year lows, something like that. And the likelihood of them going lower is, I know people are talking about negative interest rates. I think that's been a dismal failure in some of the countries they've done it in. And I don't think the United States is going to pursue that. But, they could. At that point, then you need to start worrying about your bank. In my opinion, you need to, because there'll be probably some sort of run on the bank, even if it's a small run. So, anyway, that's what I would say about that. What else do we look at? The Wilshire did finally take out its high. It has a new high. There's a new high in the Wilshire. You can see it's right here, but then you can also see that something's wrong with that Wilshire chart. I'll tell you what, let's not look at that Wilshire chart because that's a little bit confusing to me the way it looks. Let's look at that 13-week Treasury yield. This gives us a glimpse into what the Fed may or may not do. You can still see we're holding above this trend line, and if this gets above this 0.03563, where it shows 3.5 here, if it gets above that, the Fed will be raising rates, in my opinion. So and that probably will have some sort of negative effect on the market, I'm guessing. All right, let's switch over and look at the dollar and look at gold and some of these other futures. So here's the dollar. The dollar's still moving up. It's broken this downtrend line. It had a pull. Let's zoom in a little bit so we can see what we're talking about here. So you can see this is what I was talking about. I'd like to see in bonds, some sort of break of the trend line, and maybe this trend line's not drawn. Maybe you're just looking at this trend line. So it broke the trend line, pulled back. Some of this is arbitrary, right? But it did pull back and then move out. So it looks like the dollar is on its way, up and not down, at least for the time being. I mean, it could roll back over and start and go make a new low, but I think the likelihood, the probability is that the dollar's done making new lows and now it's starting to move out. And that's exactly how I would trade it or invest it. Let's look at gold. Gold all of a sudden, back in the news. It's interesting how gold's back in the news after it's had a big run. Seems to be the way it always is, I guess. We were talking about gold and buying gold, if you recall. Well, initially here, but then it pulled back and made a new low, and then we started talking about buying gold here again. And I said just anywhere in here around 1100, 1000 to 1100 would be a great place to buy gold, and that's turned out to be pretty good. That's about a 25% gain there. Now, what's gold likely to do at this point? Well, it's likely to pull back. That's what happens after markets run up. They pull back. So you might see a pullback to here, something like this, and then another kind of a pullback into this area before bouncing again higher. So if you bought physical gold, you probably just want to hold it, because you're going to have a pullback in these uptrends from time to time. If you haven't bought any physical gold, you might look at buying some when we get down here around 1200. We should come down to an area below these lows here before getting a little bounce up. And maybe the bounce up looks like this. Maybe it's really choppy. You can't wait around, because sometimes it's choppy like this and sometimes it's not. Sometimes it's like this. It's like this bottom right here, which is down and then right back up. So, or even this one here where it was down, up, and then it did give another chance, but these were all pretty sharp moves. So just pick your spot, pick where you're going to be wrong, and go from there. I think you'll find that works pretty well. Silver is also had a decent run up. Let's zoom in on it. It's finally pulled back. It was running up still when gold was pulling back, but it even too now has started to pull back. So the same thing. We're looking for the same thing as silver. Something like, I don't know, to there and then there and then there, back to $15, and then you should see some sort of curl up and move out from there. So silver and gold are really good. Just what I would say, just get used to looking at one chart or the other. If you focus on gold, you're going to be fine if you're going to be buying silver. Unless you're trading the actual futures, or you're trading SLV. SLV is an ETF for silver, and GLD is an ETF for gold. If you're trading those individual issues, then focus on what you're trading. But if you're trying to figure out where to buy, physical gold or physical metal, then just focus on one chart or the other, and I think you'll be fine. The euro, it's taking its sweet time in working out this pattern, and maybe this pattern doesn't work out. I don't know, but it really still hasn't gone down low enough yet. So I'm looking for the euro to continue to chop lower before bouncing up again, and bouncing up again and then turning over and making a new low, probably around parity, where the dollar and the euro equal the same. Oil, oil looks like its rally is over for the time being. If you recall, we were looking for oil to come up to this yellow box here, and then I had drawn this red line just because there were potential other areas that it looked like the market could turn, and I didn't know if it'd get all the way to that yellow box anyway. And sometimes if you're trading, you want to pick a target just shy of the expected target, and that's just so you could get filled, because sometimes it'll come just like this yellow box here. How many contracts were traded, right here at that little point where your target would have been. So maybe you don't even get filled. Maybe it was just up there for a split second and then came down. So I don't know. I wasn't watching it right there, so I don't know. But you just have to be careful that you're not too greedy on your target. So sometimes you want to take a target that's a little shy, or a little shorter of where your ultimate target is. So it was okay to talk about, oil hitting this box, but it was good investing, good trading to have this line shy of that box. So what's oil likely to do now? Well, like anything else that runs up, it pulls back. So we're looking for, oil to pull back in some form or fashion. It might chop this way, but it's probably going to pull back to at least, something below this pivot right here. Again, when I'm talking about pivots, let me draw it there real quick so you know what I'm talking about. The market ran up to this high, and then it pulled back to this low, and then it ran up to there. Okay, so this area right here, this little place where the market reversed, that's called a pivot. So the market pivoted and went the other direction. When the market comes back it'll retest that pivot, and it tends to go just beyond the pivot into a zone that Steve Griffiths, for example, calls a decision point. Now, there's nothing saying that it couldn't just go right through this decision point, but if you're, again, trading and investing on some level is about probabilities. It's about what's probable here. And the probable thing is that the market hits this decision point and then turns, okay? So that's why we look for these pivots on the chart, so we can pick places where we think the market's likely to go to. Again, I said likely because it's a probability. All right. We can look real quick at the Russell. The Russell hasn't made a new high. What does that mean? I mean, it depends on who you talk to. I mean, I don't know what that kind of stuff means when the indexes don't match up. Sometimes what it means is that there's some catching up to do, and sometimes it means they could be leading. So you can see here the NASDAQ also has not rolled over. Now, the interesting thing here on the NASDAQ and the Russell, and I'll go back to the Russell and show you in a second, but this could be well, shoot, let me zoom in a little bit and draw on here for everybody. Well, okay, so here's the thing. When you're looking at this, today, right now, what I see is I see an A, B, C. So what happens after an ABC? Well, down, okay, because ABCs are corrective. Now, having said that, ABC could turn into 1, 2, 3 real easy. So if this just continues to go higher, then it wasn't a C, it's a 3. That's why you look for weakness. So what we do is let me get this off here real quick. We start looking for weakness here, and then a place to enter. So, for example, right now there's not showing a lot of weakness. So, but let's say next week we get something that looks like this, like this, okay? Well, potentially that's weakness, right? So then what we want to do is look to enter going short if we got something like that, and we would enter right in here, right? Actually, you'd enter like right, well, not there, but say right there, and you would take that position short. Okay, so right now, today, this looks like an ABC without any weakness. So we would look for weakness, and then we would look for some sort of signal that the market tells us that confirms, yes, that's weakness, and then take it to the downside. Okay, so that's how you'd look at that. So right now, the NASDAQ is not telling us anything. It's just hold on a second, I got locked up there. It's just telling us that potentially there's some weakness here. So same thing with the Russell. If you look at that, it looks similar. So although maybe there's some weaknesses developed, I think next week's going to be very telling. I mean, you have a pivot right here. Let me zoom back out. I'm trying to show you what I'm thinking as I do it, and sometimes my brain is not working as fast as it needs to. So let me stop it there, and then right here you can see a pivot. Okay, so what did we just get through talking about? Well, the market likes to run to a spot just beyond the pivot, and maybe I drew that a little too far. Maybe it's just touching it there now. In fact, let me draw that again. Let's draw it a little tighter, like that. So see, it's really there now. Maybe you get another, again, maybe you get something that looks like a dragonfly doji for those of you that know candlestick chart names. A dragonfly doji looks like this, okay? So maybe you get a dragonfly doji, and then the next week we get something that looks like this. Well, that's an intermediate term top, and so we're going to look at taking this at least to this level. So see, there's a pivot here. See all these pivots right here? Well, it's not going to let me draw that one because it's too steep. Let's draw it like this. Draw it like this. Okay, so there's a pivot here. Let's say we would trade back down to a spot like that. Okay, hopefully that makes sense. And hopefully you can start seeing the market this way. I think it'll be very helpful to you when you're trying to make a decision about, and when things start breaking these pivots by a lot, they start blowing through these pivots, well, that tells you that the market, is probably changing trend and not slowly. So that's really about it for this week. I don't think there's any other charts we really need to discuss at this point. The global Dow, this is kind of all markets combined. I look at it from time to time. It broke this trend line, but this still could be, this little up move, up, back, and up could be corrective, and maybe the global Dow is not moving to new highs. There's not enough evidence here. I wouldn't, personally, I'm not looking to go long any of these because I think if something does happen, the market could resolve itself very quickly, like a 10% move in one day, 10-15% move in one day. And obviously in a mutual fund, there's nothing you can do except take that loss. So that's one of the reasons I'm not looking to be long any of these markets. But you have to make that decision for yourself. So, all right, everybody, we'll send the link to your friends and family members. And you can go on Twitter at InvestorClass and follow me there. And you can comment here on the YouTube. If I see comments, I'll respond to them in the following presentation, or I can respond back in the comments section. It's whatever you like. So until next time, we'll see you later. Bye-bye, everybody.